Hello everyone and welcome back to a new episode. I'm John and today we'll be talking about DNEX Holdings, which has commenced arbitration proceedings with its partner, Beijing Integrated Circuit Advanced Manufacturing Company, commonly known as CGP, via its special holding vehicle called MIMAS. I'll explore the background to the issue, who's involved, how do we even arrive at this scenario, and how is DNEX doing financially at this moment as well. And finally, I'll conclude with what are the prospects of this issue going forward, and potentially what are the outcomes that will either favor you or disfavor you as an investor. So stay till the end of the video to find out. So here is the issue. On the 31st of March 2021, DNEX and CGP form a JV to acquire Silterra from Khazanah National Berhad. And the JV entailed that DNEX owns 60% and CGP owned 40%. On the other hand, Khazanah insisted that the sale of Silterra happened only with the compliance of the Industrial Coordination Act of 1975, which warrants that a Malaysian entity owns 55% of Silterra. So in this case, DNEX as the ultimate Malaysian entity should own a minimum of 55% of Silterra. All right. So if you see on the left, the corporate structure of DNEX Semiconductor, 60% is DNEX and 40% was MIMAS. And MIMAS is a wholly owned subsidiary of TTCL and also a subsidiary of CGP. Now here comes the problem. CGP does not only own MIMAS, it also owns Silterra directly. A 40% stake in Silterra, which is below the structure of the DNEX Semiconductor owning 60% of Silterra. So I'm going to explain this a little bit more shortly. Before I go into more of the shareholding structure, part of the deal also required that the JV raised 200 million over and above the sale price of 275 million as capital commitment to pump into Silterra, either as capex or operating expenditure. So therein lies the problem, because DNEX at that point of time did not have sufficient cash to actually fork out its stake of the 200 million. So DNEX did not have sufficient cash to cough up its portion of the 120 million for that capital commitment. Therefore, it decided to raise an irredeemable convertible preference share, or ICPS, of 100 million, in which MIMAS would subscribe to the entire portion. But therein lies the start of the problem, because CGP already owns 40% directly in Silterra, but it also owns DNEX Semiconductor. And if it were to subscribe the full 100 million ICPS through MIMAS, it would give it MIMAS 33.3% ownership of DNEX Semiconductor that owns 60% of Silterra. So if you do the math, by MIMAS subscribing wholly to the 100 million ICPS, that would give MIMAS indirect stake of Silterra to be 19.98%, almost 20%. Now, if you add that to the 40% CGP already owns in Silterra, that would give it 59.98%, which means 60% of Silterra would belong to CGP, which in a way negates the requirement of the Industrial Act of 1975, which requires 55% of it being owned by a Malaysian entity. So it goes in direct violation. Obviously, certain agreements were signed, and there was a bit of the mechanics hoo-ha, and that's where CGP says, no, we've already signed this, we're going to go ahead. But MITI stressed that, hey, no guys, you agreed to the 55% deal, DNEX, CGP, you go and sort it out, right? That's where the state we're in today. So let's understand DNEX revenue segment a little bit better to see the importance of Silterra for their future growth. Now, in the past, for the 18 months of 2021, you can see that 31% of DNEX's revenue was contributed by the energy division, and another 69% was contributed by their IT division. Fast forward to financial year 2022, you can see that technology, in which Silterra is the big part of it, besides some consulting business, which is very, very minor, contributed to about 60% of their revenue. So can you imagine the importance of Silterra for their future growth plans and also future revenue? So if you were to look at the semiconductor value chain, your Silterra is not going to be equivalent to your TSMC, which are at the leading edge, but rather they are at the lagging or even trailing edges of semiconductor. That means their chips are not going to be the most advanced, but are contained within a very niche segment called silicon photonics and MEMS. Now, why is that important is because while we see a lot of leading edge semiconductor being talked about in the news, if you study the value chain well enough, you realize that there's also a very high demand for lagging or even trailing edge semiconductors, especially within the MEMS, especially within the power devices and also silicon photonics field. So I know I may not do justice of explaining all this in detail, but just bear with me. Think of this as even if you need phones and you need very fast logic chips, you also need the periphery chips to be able to have that device functioning. Power is one of them, radio frequency is one of them, and also MEMS is one of them. Think of MEMS as your finger sensors, your accelerometers on your phone. These are part of MEMS devices actually. And even though they're at the lagging or even trailing edge, you will see that there's about 10% CAGR growth between now all the way until 2023. So there's still a very huge demand for this kind of chips and devices, and that's where Silterra's niche is. One way to see where the Silterra stand is to do a peer comparison on the production capacity. So if you followed Jeff Darrow's, the former CEO's briefings before, he did mention this name called Grace Hua Hong, which is a Chinese-based wafer fabrication company in China, based out of China. They have capacities of 8-inch as well as 12-inch fabrication facilities, and their 8-inch can do about 180,000 wafer starts a month. Comparatively to Silterra, they can only do about 46,000 wafer starts a month, which is about 1/3 of that of Grace Hua Hong. Taking a look at DNEX's financials, you can see how the acquisition of Silterra as well as further acquisition of their remaining stake that they do not own in Pink Petroleum actually was used to drive the revenue. Revenue jumped from 330 million to 1.5 billion, almost 5 times their revenue in 2021, which is a good sign. And margins actually went up because in 2022, actually margins shot all the way to gross margins, I'm talking about, or more than 40%. And that's something that is pivotal to DNEX's change. Rather than relying on their previous business model of IT contracts to the government, now the two big pillars are actually Silterra as a front-end foundry, as well as Pink Petroleum as oil and gas revenue from an operating asset. So I guess it bodes well, provided that they can clear up the fiasco of this shareholding and that 55% ruling by MITI. So looking at their competitor, pure play foundry, Hua Hong Semiconductor Limited, average margins you're talking about at least more than 20% gross margins. And as you can see, in 2021, it was a bull year for them. I think for all the semicon players, it was an important year, blockbuster year, because the demand was for semicon and electronics was actually carried forward. Obviously, there's going to be headwinds next year as a lot of people within the semicon industry are already bracing for a downturn or recession. But nevertheless, as I've always mentioned in my previous videos when I talk about semicon and the electronics sector, is that even though it's cyclical, it's an upward cyclical trend. The demand for electronics doesn't seem to abate. Yes, there are times when people oversupply. There was over demand and oversupply, but once it gets back to the equilibrium, it's on an upward trajectory. So I think these guys are poised to benefit from when it turns and go towards that upward trajectory in the future. Out of curiosity, I just wanted to see what was Silterra's potential valuation, and I did a peer comparison to Hua Hong, which has broken down its production capacity for their 8-inch as well as the profit segment. And it's in Hong Kong dollars, so I converted it to net profit in Malaysian ringgit. They were producing about 180,000 wafer starts a month, whereas Silterra's is 46,000. So assuming their plants or their fabrication facilities are fully utilized 100%, if I were to scale the ratio, Silterra is about 26% of Hua Hong. And with a net profit, assuming net profit is the same, cost remains the same, obviously there's some subtle differences, but just for a rough gauge purposes, the net profit of 26% of Hua Hong would give Silterra about 33 million. And if they were to be valued, just Silterra would be to be valued as its own entity at a PE of 11, the market cap would be about 363 million or 364 million versus that of 1.4 billion for Hua Hong. And this is at a PE of 11, guys. So shortly, I'll show you DNEX as an entirety. What will the valuations look like? And we're going to go into the concluding remarks of what are the potential scenarios that will happen and how does it impact you as an investor. So if you were to look at DNEX as a group, because it's got its Pink Petroleum as one of its subsidiaries and Silterra as one of its largest subsidiaries, a revenue contributor, a lot of analysts have kind of forecasted revenue to be between 1.5 to about 1.7 billion come 2024. That's their estimation. Profit or loss, profit will be roughly about 295 million, right? And if the current market cap were to suggest the market's perception about DNEX is giving it a multiple about 6 times. And if they do hit that 2024 revenue and profit, and we were to value the market cap at 6 times PE multiples, you'll be getting roughly about 1.8 billion. So the upside from now to 2 years from now is only about 6%. Here comes the blue sky and probably the bear. This is probably the bear case, because if they do really get Silterra up and running and they execute well, operationally efficient, I doubt that PE of 6, it's a fair multiple to be giving DNEX. That's provided they execute flawlessly. But if there is a re-rating and most of the OSATs actually trade anywhere between 15 to 20 times, right? Multiple, or sometimes even higher. A lot of semicon and electronic companies in Malaysia trade at very high multiples. So let's just assume that if they do get a re-rating and a PE of 12, right? You're talking about at least 100% upside from here. But that's, again, the caveat is whether they execute this. And it's no harm observing their quarterly performance from here onwards and see whether they can walk the talk. What could be the potential outcome for this DNEX and CGP arbitration? I predict 3 scenarios. The first one is the worst case scenario where the arbitration falls apart, CGP doesn't want to back down at all, and all party loses, because I don't think MITI will back down on that 55% requirement. And it is only right because Khazanah has poured out so much money to support a loss-making business just to ensure Malaysia has a foundry of its own. And if scenario 1, CGP doesn't want to back down, and DNEX, I'm very sure DNEX is open to renegotiating certain terms. But if CGP just doesn't want to back down and just insists on whatever they sign holds true, then all party will lose, because 55% will be breached, right? That requirement will be breached. The second scenario is someone else actually gets to buy over the stake that CGP has actually relinquished. That means CGP doesn't want to back down, insists on subscribing to that full 100 million ICPS, and MITI doesn't allow this to happen. Then Hon Hai, who is also a 3.8% shareholder of DNEX, could take up CGP stake, because if CGP doesn't take that stake, DNEX is the one that has the rights of first refusal to be whether they want to take it up. And I'm very sure Hon Hai, looking at the long-term trend, they would want to have a stake in a foundry. And that's one of the reasons why I think they bought up 3.8% of DNEX in the first place, right? That's the second scenario. The third scenario is that CGP takes a haircut. Actually, it's really related to scenario 1 in a way that if CGP just doesn't want to back down, then too bad, everyone gets screwed. But scenario 3 seems to be the most optimal. Instead of taking the whole 33.3% when they subscribe to the entire SCPS, they only subscribe to 25% of DNEX Semicon, the subsidiary that they both have a stake in, which is only about an 8.3% haircut. I don't think that's too much to ask in my point of view, but I may be wrong. So I guess scenario 3 is what would be the best likely outcome to happen. I doubt I'm not saying that scenario 1, there is no chance of it happening, but I think the probability of that happening is the lowest because everybody gets screwed, right? DNEX will have to find a new partner, look for another agreement. Scenario 2, CGP has the biggest to lose because he backs out. He insists on that high stake, backs out, someone else takes his share. And they've wasted months or even years to actually negotiate and get a stake in Silterra, right? Which they already have 40% in, right? That means it becomes 3 parties instead of 2. So DNEX, CGP, and let's say Hon Hai takes up 3. The third scenario seems to be the most optimal. And, hopefully that's something that happens. And that's where once all this fiasco is settled, they can focus back onto the operation of the business, make sure even they are at the lagging or even trailing edge of a semicon, they can still be profitable. And who knows? I'm very sure if they execute very well, I doubt the PE rating will be at 6. It will definitely be much higher than that. And I do wish the DNEX management team all the best. And hopefully cool heads actually prevail. If you love this kind of content, subscribe to my channel, give it a like, and hit that notification bell because you will be notified when new videos are out. I'll see you guys in the next video.